Hi, we are back with one more revision video, that is revision video on lease accounting. First the question comes before accounting portion, sir, what do you mean by lease? We have heard of that word everywhere. People say I have gave my property on lease, I have gave my house on lease, I left my house on lease, or I am staying on lease, or we might see the board house is available for the lease. Sir, what exactly is the lease then? So you can say lease as a simple agreement. Lease is an agreement, sir. Lease is an agreement which is entered into by two people. Which is entered by two people. Who are the two people? One, the person who is having the asset. One more person is the person who want to use the asset. I repeat, it is entered by two people. One, the person who is having the asset, owner of the asset. The other person is who want to use the asset. Now the other person might not be able to purchase it, so he might ask the person with the asset. For example, there are two people. One is A who is having the asset, the other one is B who want to use the asset. Now B do not have enough resource to purchase the asset. So he came to A and asked A, boss, listen, can you give your asset for usage? Can you give your asset for usage? A asked, what I will get in return? B told, you will get payment in return. Either it might be monthly payments, yearly payments, or one lump sum payment. He might pay in a monthly, he might pay monthly, or he might pay half yearly, yearly, quarterly, depending upon the agreement, or in a single term he might pay certain amount. Okay, so whereas A will allow B to use his asset for that particular period which they agreed. For example, for the next 5 years, B is going to pay 1 lakh rupees each every year for using a asset which is there with the A. So that 5 years are there, no, that is called as specified time period. That particular specified time period is called as lease term. Okay, fine. Now A who is having a asset, he is called as lessor. Whereas B who want to use the asset, he is called as lessee. A is called as lessor and B is called as lessee. The person who is the owner of the asset and providing that asset to use in return of specific payment, he will be called as lessor. Whereas the person who is obtaining the asset for use and paying certain money for using the asset, he is called as lessee. Okay, sir. In India, lease accounting is governed under AS 19, Accounting Standard 19. Okay. Sir, what are the things covered under Accounting Standard 19? AS 19 covers all the type of leases except these three. AS 19 covers all kind of leases except these three. Which are those three, sir? One, lease agreement to explore the natural resources, okay, or other minerals, etc. If any lease agreement is there to explore the natural resources, for that AS 19 is not applicable. If there is any lease agreement relating to motion pictures, video recording, plays, manuscripts, patents, copyright, etc., for that also AS 19 is not applicable. And if any lease agreement is entered relating to the land, for that also AS 19 is not applicable. Okay. You can say leases are divided into two. You can say leases are divided into two. What are they, sir? Finance lease, operating lease. Lease can be divided into two, finance lease and operating lease. Sir, what do you mean by finance lease? Finance lease is the lease in which almost all the risk and reward of the asset is transferred to the lessee by the lessor. Almost all the risk and reward of the asset is transferred by lessee, transferred to lessee by the lessor, which means basically finance lease is kind of lease which is just a financial arrangement. Your hire purchase is there, no, where after certain payments you are going to own your asset. You are going to own that particular asset. That is also kind of finance lease only. Finance lease is just a financial arrangement. Right now you don't have money to purchase the asset, but after payment of certain money you are going to own it. Or you might pay 1 lakh rupees for 5 years. Later after 5th year, if you pay 50,000 rupees more, you are going to get that particular asset to yourself. I mean, you will become a owner of that particular asset. This kind of lease is there, no, where almost all the risk and reward of the asset will be transferred. Here lessor business is not to run a business by holding the asset. Here what he will do, he will be having certain assets. For example, he is having different auto rickshaws. Okay, now the people who want to run the business of auto rickshaw, the rickshaw drivers, they will come, they will say 5 years I am going to pay so much to you, 40,000 each to you for the next 5 years. He will say, okay, you pay me 40,000 each for the next 5 years. After 5 years, if you pay me 20,000 more, this rickshaw is yours. So this is finance lease, where risk and reward will be transferred just like the sale to your lessee. Okay, all the other things where you are just want to operate your lease, you want to operate properly by giving it to rent, that is called as operating lease. Okay, and there is one more thing called non-cancelable lease. This is kind of finance lease only, where you can't cancel the lease agreement unless the following things occurs. 1, upon occurrence of certain remotely contingencies. 2, if your lessor agrees to discontinue. 3, if you enter into agreement with your lessor for some other asset or similar kind of asset which is equivalent to this asset. For example, right now you are in one building A, and you want to shift into building B, which is of your same owner, which is of your same lessor, for the same portion, same space and all. Now you want to discontinue building A and you want to shift into building B. Now this is allowed. So accept these items. And one more thing is, upon additional amount payment, your lessor might say, okay boss, if you don't want to be in the lease, your lease term is not yet completed, but if you don't want to be in the lease, you pay me so much amount and you go, you are free to go. For example, you pay me lump sum of 3 lakh rupees, lease agreement we are going to cancel. That could be there. Next, inception of lease, that is when you start using, or the date of agreement, whichever is earlier, that will be the starting date of the lease, inception of the lease. What is lease term? Lease term is the time allowed by your lessor, in which a lessee can use the asset. See, it is a non-cancelable period for which the lessee has agreed to take on the lease. Okay, for example, if I have taken building on lease for 10 years, the 10 years is there, no, that is the lease term. Okay. There is one more thing called minimum lease payment. Minimum lease payment is excluding the variables. Whatever lessee has agreed to pay to the lessor, irrespective of whether he uses the asset, if he don't use the asset, irrespective of that, if any payment is agreed by lessee to the lessor, that is called as minimum lease payment. Usually it includes fixed rent amount, upon that any residual guarantee which you have given. Okay, any residual value of guarantee which you have given, either lessee might have given or on behalf of lessee someone has given, that is called as minimum lease payments. Next is fair value, that is any person is ready to purchase the asset, the value will be there, no, at which the outsider will be ready to purchase the asset, that is called as fair value, basically arm length price you can say. Economic life is the total life of your asset, whereas useful life is the life how much you used, you are going to use in your lease term, that is useful life. What do you mean by residual value? After the usage of your asset, in the lease term, the left out value of your asset is there, no, that is called as residual value. See, residual value of a leased asset is the estimated fair value of the asset at the end of the lease term. Okay, what do you mean by guaranteed residual value? If your lessee says, boss, at the end of my lease term, for example, after the end of my lease term of 10 years, if anyone is not ready to buy, I am going to buy it at rupees 1 lakh, minimum 1 lakh. If anyone buys it for 80,000, remaining 20,000 I am going to contribute to you. That minimum guarantee what lessee will give, no, lessee or on behalf of lessee someone else, that is called as guaranteed residual value. Let us assume you estimated your residual value as 1,30,000. The guaranteed residual value which is given by lessee or on behalf of him someone else is 1 lakh rupees. Then the 30,000 is there, no, that 30,000 is called as unguaranteed residual value. That is the difference between residual value and a guaranteed residual value is called as unguaranteed residual value. Okay, done sir. Next, sir, what do you mean by gross investment in the lease? What do you mean by gross investment in the lease? It is simple. Gross investment is aggregate of minimum lease payments under a finance lease from the standpoint of view of lessor and minimum unguaranteed and any unguaranteed residual value accruing to the lessor. Basically, overall value. Simple. Minimum lease guarantee means what? Sorry, minimum lease payment means what? Rents, right? Usually, rent which you are going to pay into term. How much? How many terms? For example, you are going to pay 1 lakh rupees each for next 20 years, irrespective of whether you use or not. This is 20 lakh rupees. Okay. Minimum lease payment is not only so much. You have to add any guaranteed residual value if you have given. For example, 20 lakh towards a rent. Okay, sir. And you have given a guarantee of 1 lakh rupees. So this is also form part of your minimum residual value, sorry, minimum lease payment. Yes sir. So minimum lease payment is 21 lakh. For this, if you add a unguaranteed residual value, that is 21 lakh plus unguaranteed residual value was how much? 30,000. So your 21 lakh 30,000 is there, no? That is your gross investment in the lease. I repeat, gross investment in the lease is nothing but minimum lease payment plus unguaranteed residual value. What do you mean by minimum lease payment, sir? Minimum lease payment is fixed rent which you are going to give for the total period, total lease period, plus any guaranteed residual value which you have agreed for that one. Okay. Sir, what do you mean by unearned finance income? On this question might come to calculate the unearned finance income. What do you mean by unearned finance income, sir? Gross investment in the lease which you have already calculated minus present value of the minimum lease payment under the finance lease and present value of your unguaranteed residual value. So your gross investment minus present value of minimum lease payment, present value of minimum lease payment, yes, present value of your minimum lease payment, what minus, sir? Gross investment in the lease, gross investment minus present value of minimum lease payment minus present value of unguaranteed residual value minus present value of unguaranteed residual value will give you unearned finance income. Unearned finance income, which means you are going to earn this after so many years. I mean, interest portion which will be there in your lease payment, no, that is this. Any interest payment which is there in this, which is there in your lease payment, that is called as unearned finance income. Okay. Sir, what do you mean by net investment? Net investment in the lease is the gross investment in the lease less unearned finance income. Gross investment minus unearned finance income, that is the less net investment, which means right now how much you have invested in the lease. Right now, today, how much you are invested in the lease, that is that. What do you mean by contingent rent, sir? Contingent rent is a rent which is based on a variable, basically variable it is. It is not fixed. Based upon usage might be price indices, market, etc, etc. It depends. If it depends rent, if it depends on that, it is called as contingent rent. So while calculating a MLP, that is minimum lease payment, you should ignore this contingent. Only the fixed portion is taken. Okay. So classification, as I already told you, classification of a lease can be done into two ways. Finance lease as well as operating lease. Finance lease, what happens? Lessor is going to transfer almost all the rights and rewards, risk and rewards of the leased asset to the lessee. Basically, it is just your financial arrangement. Right now you don't have money, so you are going to take a asset from someone. For him you are going to pay the installments. It is actually not even a lease rents, it is kind of installments which you are going to pay. Okay sir, fine. So when you can classify a finance lease, when you can classify a lease as a finance lease, there are certain conditions. See, the lessor transfers ownership of the assets to the lessee by the end of lease term. If the lessor agrees, at the end of lease term, I am going to transfer you the ownership. That is, of course, the finance lease, no? Because at the end, finally asset is getting transferred to the lessee. Okay. The lessee has an option to purchase the asset. Lessee has the option to purchase the asset at the end at a price which is expected to be sufficiently lower than the fair value. For example, after 5 years, your asset value is 1 lakh rupees. You are offering your lessee that particular asset only at rupees 30,000, which means sufficiently lesser than the fair value. If it is equal to fair value, our lessee might purchase the new asset at the same price or might discontinue, right? So, the lease term is for a major part of the economic life of the asset. For example, your asset is having 5 years life, you have given lease 4 years, 8 months, which means only 4 months will be remaining. Either it might be used or not used. So, if your agreed period, lease period is almost to the equal to your economic life, that is maximum period which you can use, till which you can use your asset, then it is finance lease. At the inception of the lease, the present value of the MLP amount to at least substantially all the fair value of the leased asset. So here this point is what you use to usually compute whether it's finance lease or operating lease. Okay, what you have to do is you have to find out the present value of a minimum lease payment. Okay, and you have to find out how much proportion of a MLP is there in the fair value. For example, MLP divided by fair value, if you get 80% plus, 80% I am generally telling it, it's my point of view. Substantial decision is left to you. I usually say okay 80% boss. If it is more than 80%, no, then I will say it as a finance lease, because almost 80% of the values asset I am going to use. The leased asset is of a specialized nature such that only the lessee can use it. For example, you might have seen a RCB bus where Virat's photo is there, Duplessis photo is there, Max's photo is there. So they painted it like a RCB, the seats are like a RCB. Now if they want to give it to someone, the bus company want to give it to someone, no one will be ready to purchase directly. They will say first repaint it, later change the seat covers, later you pay us, which means where the substantial money is involved, substantial modification is involved to sell the asset to someone else. Then what he will do, he will ask the RCB people to purchase it after certain terms, right, after certain period. So again, when you give an option to purchase, of course it will become a finance lease. How you are going to treat your finance lease in your books? How the finance lease will be treated? There is something called substance over form. Sir, what do you mean by substance over form? Legality comes later, sir. Form will come later. Substantiality is what matters. Practically what is happening, that is what matters. Which means, although ownership is with the lessor, all the risk and reward is with the lessee. For name purpose, for legality purpose, lessor is the owner of the asset. But in an actual sense, practical sense, lessee is the owner of the asset. I repeat, for the legality purpose, lessor is the owner of the asset. But as a practical point of view, substance point of view, lessee is the owner of the asset. So what we are going to do is, we are going to de-recognize the asset from our lessor book, because it is no more is asset. In a lessee book, it will be treated as a asset. In a lessee book, it will be treated as an asset. Okay, sir, done. Done. So, along with asset, same proportion of liability will also be created. Because today only you are getting asset. To get that asset, you have to pay for next 10 years, no? So, that next 10 years rent will be there, no? Lease rentals. That will be treated as a liability. Because you are creating an asset is getting debited. Credit what? You are not paying full money, no? You are not paying full money. So you are treating it as a liability, that is future lease payments you are going to keep it as a liability. Okay sir, done. It should be at a fair value, okay? The value at which you recognize is there, no, that should be at a fair value. However, if the fair value of a leased assets exceeds the present value of the MLP, if your fair value of the asset is exceeding your MLP, because your MLP is what your liability, right? Your MLP is what your liability, present value of MLP is what your liability. So if your fair value of the asset is exceeding the present value of the MLP, then you have to consider present value of MLP as a value of asset. So liability will be created at present value of MLP, asset will be created at present value of MLP. In the books of the lessor, sir, in the books of the lessor, asset will go out, at that same point of time receivables will commence it. Asset will go, asset will get credited, at the same point of time receivables from the lessee will come, because in future for the next 10 years you are able to receive the particular lease payments, okay. So yes, receivable will come and will come in the balance sheet of our lessor. Give me a second. Yes. Next one, sir, who is going to charge the depreciation now? Who is the owner of the asset? Substance over form. Who is not actual owner, I mean not a legal owner, but who is using the asset? Who is going to be the owner of the asset? Lessee will be the owner of the asset, no? So he is going to depreciate it. Okay, sir, how much to depreciate? Listen very carefully. If he is going to purchase the asset at the end of the lease term, then you can allocate the depreciation to the economic life. If there is a possibility that lessee is not going to keep the asset after the lease period, then the lease period will be there, no? Within that, make sure that your whole value will be written off. I mean, for example, economic life is 12 years. Lease term is 10 years. Asset value, let us assume 10 lakh rupees. Now, you have to check whether lessee is having the intention to keep the asset after 10 years or not. If he is having the intention to keep the asset, then make sure that depreciation will be for the 12 years. If he is not having any intention to keep the asset, then you just limit your depreciation to the extent of 10 years, which means write off whole 10 lakh rupees within 10 years. Okay, sir. Next one is, in the books of lessor, as I already told, that particular asset which is given on lease, that will go and receivables will come. Okay. Next one is operating lease. Operating lease, basically what you are going to do is, you are just paying for what you are using, which means it is your revenue expenditures, right? So you are just transferring your lease payments to the P&L. You are just transferring your lease payments to the P&L. Asset will be there in the lessor book only, because he is the actual owner, he is the legal owner, he is the all the owner. And depreciation, as he is having the asset in his books, he is going to depreciate it. Okay. That's it. There are certain illustrations, you can go through it. Okay. I hope you enjoyed the video. It is bit of confusing topic, but I tried to cover theoretical point of view as much as possible. Okay. We'll see you in the next video. Bye bye.